What advice would you give the aspiring investor that's 6 to 12 months behind you?
Two things. One, find a mentor. This is a team sport, and I think it really people learn in different ways. You might go pay $30,000 for a professional mentoring program, or I took the route of, hey, I found somebody who I connected with, valued in terms of how they operate. So find a mentor wherever you find them, whether it's a networking event or one of these weekend events, and stick to them and learn from them and add value. So don't just be an
Yeah.
energy sucker, give value back to them.
Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Super excited for today's show. It's one of our new first deal series. And we've got Jenny Gu on the line with us, who recently closed on actually a couple of apartment deals. We're going to talk specifically about one of them, but we might bring the other one. But Jenny Gu was the aspiring investor in our Ask the Expert episode number 61 with Christine Jefferson. So what I want to do is just tell you a little bit about Jenny, and then we'll start talking. So Jenny's a managing partner at Vertical Street Ventures. She oversees asset management and investor relations. Prior to becoming a full-time operator in the apartment space, Jenny was a sales director at Procter Gamble for 13 years, working on brands like Dawn, Cascade, and Swiffer. She's managed cross-functional teams on top accounts, including Costco, Walmart, and Target, all big names. She graduated from the University of Arizona with a degree in business management and received her MBA from the University of Minnesota. So that said, Jenny, welcome to the show.
Great. Thanks for having me here.
Yeah, I'm excited to have you back. I mean, you've done a whole lot of amazing things. I remember when we talked last on the podcast, you had a couple of deals under contract, but I mean, how many have you closed on, as a GP member since we last talked?
So let's see, our first episode aired in November.
Mhm.
So in December, I closed on two deals on the very same day. So
Mhm.
that was quite an adventure.
Yep.
Both of those in Arizona. And then actually today, in a few hours, I'll be signing the closing docs for another deal we have in Arizona. So it's been a very busy couple of months since we last talked.
Yeah, that's absolutely amazing. And I'm happy to see that you guys are having so much success. So let's do this. Let's talk a little bit about your background and what got you into apartment investing.
So I've been in corporate America. I worked for Procter and Gamble for 13 years,
Mhm.
right after college, selling brands like Dawn, Cascade, Swiffer, so soap brands,
Mhm.
and love the company, love the people I worked with. And during that time, we started investing in real estate. So when I lived in
Mhm.
Cincinnati, my husband and I started venturing into what it would look like to get some passive income. So, like many other folks in this
Yep.
business, we started with single family and accumulated a portfolio in Cincinnati before moving back to California in July of 2019.
Mhm.
And right before then, we were like, we love this business, it's doing well, but we would really like to grow faster, to scale up quicker.
Mhm.
And that's when we started double clicking into multifamily. And long story short, we love the idea, we love the concept. The financials made sense. And with wanting to spend more time with kids, to have a more flexible schedule,
Mhm.
we decided I would leave my job at P&G
Mhm.
and pursue this multifamily business full time. So actually, a year ago this week, I left P&G.
Mm.
And so 12 months later, it's been a whirlwind, but lots of activity that I've been super happy about.
Well, congratulations on your 1 year anniversary mark. Most people that know me know that I'm counting down to when I can leave my. It's not corporate America. It's U.S. government employment. But I can't wait to follow your footsteps, and I'm excited to reach that point myself. So this is awesome. So we talked about this last time, but I'm going to ask you the same question again because I think it has such an important role in our success. What is your big burning why?
Our why is just, it's simple. It's family, right?
Mhm.
And time. And due to unfortunate circumstances, we moved back to California because of family. And my father-in-law got sick. He's great now. He had lung cancer, and he's doing perfectly fine now. But we have two small kids, and we really wanted to get back to the West Coast where both our families are from
Yeah.
and are currently living. So, as we sat down and made priority calls, it was just a no-brainer.
Mhm.
Nothing compares to spending the little time we have here with the people we love. And it made the choice very, very simple for
Yeah.
us.
Yeah, and I think that's one of the benefits of apartment investing is you can control your time a
Mhm.
lot more than you can in a job like, I don't know, Procter and Gamble or, the United States Marine Corps. They kind of have a monopoly over your time during the week,
Right.
because you're trying to get that paycheck at the end of the day. So,
Right. Exactly. So
yeah, I
yeah,
think.
I mean, we figured multifamily and real estate was the way to go to generate more passive income,
Mhm.
to be able to spend more time with the people we love and do the things we love. So it
Yeah.
made perfect sense.
Yeah, and I think that's a common trend among most people who are in this business is, they want their time, they want their family, they want to be able to
Mhm.
spend their time with their family. Um,
Absolutely.
so that said, a couple months ago, we brought you on with Christine Jefferson, who incidentally has been absolutely amazing, to me, and it really helped me along in my first stages. What were some of the things that she helped you with in that conversation?
Yeah, yeah. One of the questions I asked her was, given this industry, a lot of the financial numbers are very similar across any deal you look at, right? So
Hmm.
total returns averaging 7 to 90% and cash on cash between 8 to 10. So how do you differentiate yourself with other sponsorship teams or other
Hmm.
JV teams? And what she said, I've actually repeated now, which I thought was really helpful. So what she said was really, because the numbers are so similar, you're really investing in the sponsorship team,
Hmm.
right? And so I took that to heart. And as I began, taking down deals and raising capital and talking to investors, that really resonated with me. And, people forget sometimes that this is a people first business,
Hmm.
right? You're impacting lives, you're working cross functionally. And your investors are a team, part of your team. They're not just a number to help you raise capital, they are
Yep.
actually part of your team. And so what I really strive to do is take the time to invest in our investors. So when we have calls with them, I want to know about their family. I want to know what they do for fun and what their goals are. I'm just not checking off a box on a list,
Hmm.
to make them, put them in the system. So I really value our relationships with our investors. And I think that's what sets us apart.
Yeah, I love that. I love that. I mean, it is truly a relationship business. And, I think as a syndicator, one of the goals we have is we want to have our investors become repeat investors, and if you're just checking the box, if you have that mentality, where we do 506Bs, did you do a 506B or C? B, yeah. So you have to have some sort of relationship with them. But if you're in the
Right.
mentality of just getting over that box checked hurdle, um, it's number one, that relationship just isn't there,
Mhm.
and number two, I think long-term business, it's 100% a relationship game, and building that relationship is going to help you a lot more long-term than checking the box and making it transactional. So let's talk a little bit more about your journey in general. What was the biggest struggle you had starting out?
When I started out, I left February 2020,
Hmm.
right when COVID was really ramping up and the environment was shutting down, right? Our systems and everybody was shutting down to be safe. And so during that time, while I'm trying to figure out things I need to do to ramp up in this business,
Hmm.
while things were shutting down, it was challenging to actually even find deals, right? And
Yeah.
so the first quarter of the whole pandemic, call it, March, April, May, nothing was really available in Arizona. Not a ton of, everyone was holding back their deals just to wait and see, and rightfully so, because we didn't know what was going to happen. So the challenging part was one, finding deals, and two, finding myself to make sure I'm patient, right? Because
Hmm.
I like to take action. And so not being able to act on anything immediately after learning the process was a little bit of a struggle for me. But I had a great team, a great mentor who reminded me that it takes a little bit of patience to find the right deal. And ultimately, it works out in the end. So,
Yeah, I mean, all real struggles. I mean, you were absolutely right. A lot of people who wanted to sell, they were worried about the price they'd be able to get
mhm,
because of the COVID marketplace. And not to mention the fact that a lot of lenders stopped lending, and the ones that did, you added a lot of extra, requirements and red tape on top of that. So that was a very difficult time to be an aspiring investor in the industry. But obviously, you made it through, and you've closed on a couple of deals. Now, you did mention something about team. Let's talk about your team. Who's on your team, and how did you guys come together?
Yeah. So with Vertical Street, so in December, we started Vertical Street Ventures. And how that came to be was, I spent all of last year working with some mentors. And one of them, Steve, retired in December from his
Hmm.
W-2 job. And so, the stars aligned. It all, was fate. And so I said, Steve, I want to do this bigger. Let's join forces and start a company together, and let's just kick off 2021 with a bang, right? And he agreed, and we came together, and now we're partners in this new company, focusing on investors who want to generate the same passive income.
Hmm.
And then we also have Randy, who is a huge help to us. He helps us run our operations. He does a lot of our underwriting now. He was formerly a rocket scientist, so if any deal he approves, it's a good deal.
So
So
you're confident that his numbers are solid, is what you're saying?
if he can launch people into space, he can launch an apartment, is what I tell him. So
Yeah, yeah. I mean, I think that there's obviously the skill set is there, being able to analyze the numbers and make
yes,
sure I's are dotted and T's are crossed. That's important. Anybody else? You saw Steve and Randy. Anybody else on the team?
that's three of us right now, but
Okay.
we're growing so quickly. I mean, you can't do everything yourself, and right
Yep.
now we're kind of jack of all trades between the three of us. So I
Hmm.
think really quickly we want to expand our team even bigger,
Hmm.
so that we can grow faster.
Okay. Now, what roles do each of you guys have? You say jack of all, but I would
Yeah.
assume that each one has a little bit of a specialty inside the
Yes.
company.
Yes. And it's this is how you should be building your team. Find somebody who has complementary skills to you, so you're more well-rounded, but then also is there to banter and even have some sort of conflict, so you can push ideas back and forth together, right? It
Mhm.
shouldn't always be harmony, because you want to make sure you solve problems and someone have some sort of issue that we can solve together, right?
Mhm.
So Steve, he's done this a little bit longer than I have, so he's really good at already having a relationship in the
Mhm.
field, but he's great at acquisitions. He's got a great relationship building skill set that works well with brokers and lenders. So he's kind of our acquisitions, I'll
Mhm.
say, guy. I'm really good at execution. So I'll take ideas, I'll simplify, vision, create the strategies and tactics to go execute a business plan.
Mhm.
And then Randy's our super analytical guy. Again,
Yep.
rocket
Rocket
scientist, but he's
scientists.
great at looking at numbers and details and,
Mhm.
perfection. So that's kind of our team that rounds out
Mhm.
all of our skill sets together. And then we all have soft skills as well that complement each other.
Yeah. Now, where did you meet these guys?
So my husband actually met Steve
Mhm.
first in December, gosh, of 2019
Mhm.
at one of these multifamily meetups. Steve was
Nice.
speaking. And my husband actually got us into real estate first, and then I hopped on the train shortly after. But after the two of those guys met, they had coffee and connected. He brought me on, and I joined the team, and we just really got to know each other over the course of last year. So Steve was still working. I had quit my job, so I had the capability, the capacity to really be the one looking for deals, underwriting it, and bringing them to the team, right?
Yeah.
So essentially, Steve and I joke around that I essentially interned for Steve, for lack of a better word, because he had an existing a list of properties in Arizona.
Mhm.
Got my MBA on the job of managing an apartment, and then by the end of the year, when we found our first deal together, it just made it everything came into place. And then
Nice.
Randy, Steve has known he's a lifelong friend of
Okay.
Steve, so yeah.
So yeah, I see that over and over again. You met him at a meetup, which
Yep.
is why meetups are so valuable. I've said this many times before. So when I first started going to meetups, I had the wrong attitude. I went and I would look at the subject and I would say, is that a subject that I need to learn about? And that's how I decided which meetups to go to. And I quickly realized that the most important part of the meetups happened after the speaker sat down, the networking and everything else that happens along with there. Because, as you said, and we both said in this episode, it's a relationship business, so I love that. And I also love that Steve had been your mentor prior to, and, you basically formed a company with your mentor, which is, I think, a really good relationship to have. So let's talk about this deal. And if I'm not mistaken, 28 unit in Glendale, Arizona, right?
You got it. So as I mentioned earlier, we actually closed on two deals on the very same day. So
Hmm.
I'll talk about this one
Yep.
today. But yes, it's 28 units in Glendale, Arizona.
Okay.
So the funny story is this is where a little bit of persistence and why building a relationship with the brokers is so important.
Hmm.
So I actually saw this deal come onto the market back in July of last year.
Okay.
And even after I sent one of our other partners out there to do the tour and we loved it, the next week it was under contract. So that's how fast, once Arizona, I'll call it, opened back up for business,
Mm-hmm.
this deals just came and it just got snatched up immediately. So we were super bummed because we loved the property, we loved the location. But then, we moved on, heartbroken, of course, but we
Yep.
moved on, and then we were just doing our business, finding other deals. And then I think it was in September, the broker called me back and said, "Hey, Jenny, I know you're interested. The deal is falling out of escrow today.
Mm-hmm.
Do you still want it?" And I'm like, absolutely.
Yeah.
Well, one, why did it fall out?
Yep.
Right? Why did it not go through? And then two, absolutely.
Yeah.
And so we quickly were under contract within, a matter of days on that
Wow.
property. So
Nice. Yeah, I've talked to a lot of people who've gotten deals, I guess, on the rebound. It's just one of those persistence, keeping the relationships up. And we've had several deals that we were chasing that have fallen out of contract. And so far, the times it's happened to us, we have had since gotten something else under contract, and then capacity was really our issue. But we haven't quite been able to scoop one up like that on the rebound, but a lot of people do. And I think that's a huge lesson for people to learn, is you just keep on keeping on with the broker. I
mhm.
talked to somebody last week who says, he sets himself a calendar reminder. He says once he finds out that the property goes under contract, he sets a calendar reminder for a month later, and he'll follow up with the broker, or every couple of weeks he'll follow up with the broker and just say, "Hey, how's that deal going? How's that deal going?" So
Mhm.
lots of good stuff there. So you went out, you toured it, and incidentally, how long does it take you guys to get from where you're at in Southern California to the market you're working in Arizona?
For us, it's a short 5.5 hour drive,
Okay.
1 hour flight if you're flying. So really
Yeah.
easy to get out there.
Yeah. Not bad at all. Not bad
Mhm.
at all. All right. So you got the deal under contract. Then what? Tell us about, due diligence, raising capital, everything from
Yeah.
there. Let's go.
Yeah. So actually there's four of us on this project, Steve and then two of our other partners working on this together. So we originally wanted to just do a joint venture.
Hmm.
It was a small enough property that we could have taken down by ourselves if we wanted to. But as we looked at the numbers and as we talked about the deal with our friends and family, they were like, "Hey, can we participate?" And then kind of a light bulb went off because we knew that we wanted to grow bigger next year
Hmm.
faster, right? And so we said, "You know what? Why don't we turn this into a syndication and make it a friends and
Yeah.
family deal?" And so we did, and it's been doing great. Like one of the things I always tell people, my friends and family, I wish somebody taught me this business 10 years ago.
Yeah.
And so to be able to do this for our close family and friends so that they can learn and jump on the train with us was just so invaluable. And it's a smaller enough property that, for them, it wasn't a huge stake,
Hmm.
right? The sponsorship team was putting the majority of the capital. We needed to raise 1.6 million for the
Hmm.
deal. And we were putting over 60% of the capital in and then raising the rest. And, after showing them the deal, we raised it in essentially 24 hours. We had
Nice.
commitments from a whole bunch of folks. And so we were super excited to do that. And really, that was my first syndication, right?
Hmm.
And so the experience of putting that all together was super valuable to now, running this company today. It's going to help a ton on our future deals. So that was important.
I think putting your own capital in it makes raising money a lot easier, because instead of saying, "Hey, come invest in this great deal," you can approach it from "I'm investing in this deal. I'm investing this much. Why don't you invest with me?" I think that's a much stronger position, especially if the GPs are putting 60% of the capital up. That inspires a lot of confidence in the investors. If you've got enough confidence to put in, math in public, 60% of 1.6 is what, 900,000, $1 million.
Mhm.
If you guys have enough confidence in the building to put that type of money up, you know, I think, friends and family are going to notice, and they're going to say, "Hey, Jenny's putting her money in, we should probably do the same thing." So,
Yeah.
um,
I get a lot of questions too of syndicators. They charge an acquisition fee and they charge an asset management fee. And a lot of times they'll do their math and they say, well, hold on, you're putting in money, but you're also charging a fee. So really,
Mhm.
you don't have any skin in the game. And I kind of flip that around a little bit, because how
Mhm.
I think about it, that is this, and you can tell me if it's completely wrong. But for me specifically, this is my full-time job,
Yeah.
right? So how I make money is through the acquisition process, the day-to-day business, and then of
Mhm.
course selling the property at the end. But I believe in the deal so much, I'm putting my own money into it as well. At the very least, the minimum, right, that
Yeah.
we require from our investors. Like that's our philosophy.
Yeah.
So that's just cake on top of why we think this is such a good deal. So that's kind of how I describe it to folks.
And I agree. I mean, we do this because we want to make. We are actively involved because we want to make money, and that's really what it comes down to. And with any investment that people have, there's always some sort of fee structure built in. You park your money with an investment corporation, a financial planner, financial advisor. There are always fees built in, and when you look at it, I think the fees that we're charging are almost nominal compared to what you're paying a brokerage. Some of the brokerages are taking 2 to 3% of your total balance, every single year,
Mhm.
and we're charging a 2 to 3% fee once. Everything else is based off performance in most
Right.
cases.
Right.
So yeah, so I don't think we haven't had very many issues, explaining it, and I look at it the same way. We put a lot of time, a lot of effort, and frankly, we're covering a lot of risk as syndicators
Mhm.
trying to get that deal closed.
Right. Right.
We've had six figures on the line multiple times trying to get a deal across the finish line, and at some point you've got to be compensated for the level of risk you're exposed to. But
Right. Right. You got it.
so good. So you're raising capital. Were there any big hiccups in the process?
I would say the time where my stress level did tick up a little bit
Hmm.
probably was at closing. So we closed on December 23rd,
Okay.
right? So right before Christmas,
Hmm.
we signed the closing docs just a day or two prior to that. And I think, and I don't know if it's just a factor of it's being the end of the year. Freddie and Fannie are super busy, so they're swamped with getting all the documents in time. Title companies are busy, lenders are busy, and or it's so close to Christmas that the risk of things getting delayed was
Yep.
high. And so I wouldn't say it's a hiccup. I think it's just more of a watch out of, anytime you're getting to that point,
Yeah.
just know that you need to buffer in a little bit of extra time to make
Yep.
sure everything crosses the finish line. So
Yeah, especially in the
yeah.
holiday season. Incidentally, we closed on two properties that week too.
Oh, okay.
Yeah, so I mean, I want to say the 22nd and the 24th were the days that
Mhm.
we closed, but we closed on 167 and we had a small 28 unit, same size as yours, but a lot cheaper because of the market we're looking at. I think we paid about $1 million for that, and your capital raise was bigger than our property. So you say you closed on two properties. Can you give us just like the high level details on the other property that you guys closed on?
Sure. So this one I signed on as a key principal,
Hmm.
and it's in Tucson, Arizona. It was 176 units in
Hmm.
Tucson, and both closed during that same time period, and both have been doing really well since we closed, and reaching pro forma numbers. So
Nice.
we're excited to see how this continues the rest of the year.
Awesome. Awesome. All right. So since you closed, what were the first steps you've taken? And you just kind of briefly alluded to it, but
Mhm.
what have you guys done since closing? I know it's only been 2 months at the time of recording, but what have you guys done as far as executing the business plan in the first 2 months?
Yeah, our property management team at Glendale Grows is phenomenal. So we work with CalCap Properties, and they have been instrumental to helping us execute the business plan. So I remember I talked about the team earlier. Your investors are part of your team, but your property management is essentially your right
Yeah.
arm and right leg. Like they're everything.
Hmm.
So they're super important. And we've done a lot of things since then. So we had a couple of CapEx projects, right? Removing trees, fixing the pool cool deck, the back wall, adding in a pet station. So a lot of those things that we planned on doing have been done very quickly since we closed. That's
Hmm.
important. And then also, this property I considered it a gem. Like it's a great class B property. And it was just completely under market rent because
Hmm.
the previous owner owned it for 20 years and just never
Yeah.
raised rent. And so without of the 28 units, 25 had been rehabbed. Okay, so
Mm,
we had 3 left to
okay.
do. And without even doing anything and spending a single dime, we were able to raise rents on units already rehabbed to market rent.
Wow.
So the first 2 months alone, we've seen a lot of progress in that.
Yeah.
And so still a lot to do, but we are very encouraged on the progress so far.
Yeah, that's amazing when you can find something like that. We found a property. It was actually the first one we bought, 16 unit, where the previous owner wasn't big on raising rents. His philosophy is once they're in, we're not going to raise rents on them. And then, when they move out, we'll look at rents, but his rents were far behind the market. And his goal was to have 100% occupancy. There was one particular unit where the guy had lived there for about 15 years. His rent was $350 in an area where we could have charged $800 or $900 for that unit. That's the type of stuff that's just like pure gold right there because they're paying 40% of market rents. Anyway, that's like an investor's dream right there. Same
Yeah.
ownership for 20 years. Wow.
Yeah, we thought we would get a little bit more resistance,
Mhm.
right? And it's actually gone pretty smoothly. And I think part of the reason is that, again, CalCap has done phenomenal and they just have started building that relationship with the tenants. They
Mhm.
see all the capital improvements that's going on around the property. So there's
Yeah.
that level of trust and knowledge that we're making the community better,
Yeah.
right?
And people want to stay if they see that. I mean, they see that
Exactly.
you're putting money in and they want to stay. Incidentally, we raised this gentleman's rent quite a bit. We did. We still, I think the market rent on this place was 850, and we basically doubled his rent. We went from 350 to 700, but he was still getting a good deal. He complained a little bit, but ultimately he said, "You know what? I knew this day was coming.
Yeah.
I knew
Yeah.
this day was coming." And he actually re-signed the lease, and he was happy to get still $100 discount off of market rates. But end of the day, we figured it'd be better to keep him in at slightly below market than have to do a little bit extra rehab because he'd been in there for
Right.
13 years. But
Oh, wow. Yeah.
yeah, all right. So we pretty much covered the property. The same question I ask in the Ask the Expert episodes: what's next for you?
Yeah. So, in the last episode, I
Mhm.
don't think we even were at the point where we wanted to start a company yet. So,
Yeah.
in 2 months, that's what we did. And so, really, what's next for us? So, at Vertical Street, we have a pretty aggressive goal. We want to purchase 25 million in assets under management this year.
Mhm. Nice.
And well underway with the deal I'm signing on today, and then 2 more properties in the pipeline. So we're well underway. And again, just finding the right deals. We look for deals to syndicate with our investors, and we also look for deals to joint venture with folks. So
Nice.
I think the sky's the limit really for us.
Yeah. Yeah, and you picked a good market. There's a lot of good things that are happening in Arizona. It's close to you guys.
Right.
5 hour drive is not that bad. Not quite round trip in a day, but you can hop on a plane, get there. I mean, you can literally eat breakfast with your kids, go to the market, do a couple hours worth of business, and be back for dinner.
Exactly.
So yeah, I love what you're doing. You got some really awesome goals that I think are going to be very achievable based on what you've done already. I mean, some people come in and 25 million may seem insurmountable, but based on what you've done, I think you guys are going to probably hit that by July. So here's a question that I really want to hear from you. What advice would you give the aspiring investor that's 6 to 12 months behind you?
Yeah, I've learned a lot over the last
Mhm.
12 months in the multifamily space, and specifically, I think two things. One, find a mentor.
Mhm.
This is a team sport, and I think it really people learn in different ways. You might go pay $30,000 for a professional mentoring program, right?
Mhm.
Like some of these big names out there have. Or I took the route of, hey, I found somebody who I connected with, valued in terms of how they operate. We had same values in terms of being a person, and then we had the right business mindset together. So
Mhm.
we just lined up in terms of all of those aspects, and there was a win-win situation. So he was still working. I was not no longer tied to a W-2 job, so I had the capability and the capacity, and he had the experience and the relationships and success track that I wanted, and then we just complemented each other. So find a mentor wherever you find them, whether it's a
Mhm.
networking event or one of these weekend events, and stick to them. right?
Yeah.
And learn from them and add value. So don't just be an
Yeah.
energy sucker, give value back to them.
Yeah.
And then two, I'd say start building your team. So I was fortunate enough to be able to tap into, his resources, right, and his team that
Mhm.
he built. But if you don't have that ability, start building your team. You need someone that is good with numbers. You need a salesperson. This is,
Yeah.
again, you're talking to people every day, and brokers and lenders. You need somebody who's good at sales and marketing.
Yeah.
And then someone to help operate, someone who's good with details and running a business.
Yeah.
That's your team, right? Your core team.
I love it. Find a mentor and build your team. And I think you hit the nail on the head as far as mentorship. Find somebody, whether it's paid or whether it's not paid. Find somebody, and you have to be able to add value back to them. And it sounds like in your relationship, he had the experience, but he was working full time, and you had a lot of time on your hands, and were able to leverage that to be able to add value back to him with the time that you could dedicate to the job.
Right. And the
So
skill set. So
yeah,
literally taking my corporate skill set, transferring it over to this new industry.
yeah.
And it's essentially the same skill, right? You're
Mhm.
running a business, you're project managing, you're working with different types of people. So it
Yeah.
lent itself really well and made it a
Yeah.
smoother transition.
Yep. So time and skill set, and yeah, I mean, you've got a master's of business administration already, so you obviously have the know-how. 13 years at Procter and Gamble, where you're dealing with some major brands. So you had time, you had the skill set, you were
Mhm.
able to give back to your mentor in a way that worked for both of you. So
Right. Mhm.
awesome. Well, I really enjoyed our conversation today. Loved reconnecting with you after, been a couple of months actually. I
Mhm.
mean,
You're
we,
right.
we,
Yeah.
we've thumb tapped a couple of things on LinkedIn back and forth, but maybe a couple of emails, but great reconnecting with you, and, wish you the best of luck. One question: how can our listeners learn more about you?
Yeah, great question. So you can find me on Facebook and LinkedIn.
Mhm.
And to learn more about myself and the company, you can visit us at verticalstreetventures.com. We have a list of all of our properties there. We have a free download of a case study.
Mhm.
So you can learn more about what we do and then set up time with me. I'd love to meet new people and connect with you and learn about your goals. So
Awesome. Sounds good. And we'll have the links to the website and her social media profiles in the show notes. So definitely hit her up. And Jenny, I've so much enjoyed having you on the show, and this has been awesome.